Welcome back, folks. All right, so we are looking at the New York New Week opening gap with Forex. All right, so this is a 5-minute chart, as you can see up here, upper left-hand corner. It's a British pound versus US dollar, 5-minute chart. Okay, so I want you to take a look at this and notice right over here. You see this? That is the Friday close, Sunday opening, 5 p.m. Eastern Time. So that is your New Week opening gap, and we've had a rally, rally, another rally, and a shift in market structure right there. And I talked about this in the Telegram channel. And if you have not joined my private Telegram channel, it is the 2025 lecture series. I don't do mentorship anymore. I shut down my paid private mentorship group and invited them to this group. So there's nothing out there that you're going to get your little hot little hands on and think that you're part of an exclusive community anymore, because that's gone. And I will be uploading every single commentary I've ever made in the past. Okay, so keep a lookout for that, because I'll post a playlist when I have them up, and you'll be able to watch them at your leisure. So in the meantime, what we're doing here this year is just cutting right to the brass tacks and getting right to it with a model. And I'm pulling out all the pieces of the things I taught in 2024 on this YouTube channel. So if you liked all that content, I'm actually showing real time, calling out every candlestick that's salient for a setup. And you can go back and look at this morning. I called the NASDAQ pretty much lockstep to what you see it did today. And then the same thing with the British pound versus US dollar. Now, I'm not going to go over the NASDAQ because it's pretty self explanatory. I have the most commentary in the Telegram channel this morning about that. So you can listen to the sound clips, and they're all time stamped. The idea is for you to see that it works still in Forex. So I know a lot of you, if not the majority of you, are Forex traders. So here's the new week opening gap, and we're trading inside of the New York session. So here's 7 o'clock, 10 o'clock in this area here. And we're seeing this up close candle as a buy side and balance, sell side inefficiency. I mentioned that that was likely going to perform as an inversion fair value gap. Market trades up into it. The bodies stay in close proximity to the midpoint of that. Then we rotate, go lower. And I mentioned that if we give up the ghost below this low here, after showing and proving that this is an inversion fair value gap, then it would likely trade down into the blue shaded area. And more specifically, if you look at this candlestick's low from Friday to the high candle inside of the gap. Okay, so this is a new week opening gap. I taught this on the YouTube channel last year. Go and watch the individual videos about it. The remaining portion from the open all the way up to this high, buy side delivery, not liquidity, buy side delivery. It means the market's trading higher, keeps posting higher, higher, higher prices. It stops right here. It would need the difference between this high to that low closed in. We have it here on this one single candle up. So it's lacking delivery on the downside. And that's what it does here. Okay. But prior to it, it gives you a nice little silver bullet short in here, stops dead in its tracks, and consequent encroachment of this SIBI. And we'll look at that in a moment. So you can see we have a 1-minute chart indicated with this number 1 here, and it's the British pound US dollar for FXCM. Okay, so I used this data feed today, and again, the only difference that you're going to notice is the new week opening gap, difference between Friday's closing price and Sunday, January 26, 2025's opening price. Forex.com's a little wonky, and the other brokers seem to be fair about it. This is the 5-minute inversion fair value gap, but it's being shown over a 1-minute chart. The market trades up into midpoint of it here after leaving it. Notice it trades lower here and then rallies back up into it here. And you'll see that I actually went short there and then waited for it to rally up. My stop loss was right above. See these two candlesticks sharing the same space right there? The close and the low. So at one point, this candlestick went down to that low and then closed there and then opened and traded back over top of it. So this small little area here is a balanced price range. I felt very confident that this little area here would not be traded back into. So my stop loss is right above this candlestick's opening price. The price breaks lower, comes back up, creates a little mohawk, I call it, where it just trades in colors outside the lines of the inversion fair value gap. But notice what the bodies are doing. Listen to the commentary, the little sound bites I posted this morning when I was referring to pound dollar. I said that, I want to see it stay in the lower half, and the bodies should stay in the lower half or at the consequent encroachment, which is the midpoint here, this dotted line here. Then the market breaks lower, comes back up. It goes right to this price level here we were looking for. I noted in audio clip, I said I want to see this point broken after this inversion fair value gap has proven itself. So it had to be traded to several times, and I went short here, and then I waited for this one here. I didn't want to add any more to it. And then it rotated lower, broke through here, came back up into a small little fair value gap right there in that pink box, trades right up into consequent encroachment. And look at the bodies respecting half of that. And breaks aggressively, creates a silver bullet. This is your 10 o'clock silver bullet. Breaks lower, comes back up, hits consequent encroachment there, and then sells off into the two little blue lines I very specifically outlined this morning in the Telegram channel. Here's the executions. Selling short, selling short, selling short, taking a partial as it approaches the new week opening gap. And then as it went into between these two blue lines I indicated, I just covered there. I did have a limit ordered a little bit lower for this line here plus the spread, but it just took too much time and energy to be babysitting it. And like I said, I'm not trading with Forex with real money. I told you I would do executions because there's a lot of you that want to learn, and you watch me outline this stuff live today. Zoomed in here, here's a 1 minute chart. Price trades up into the 5 minute inversion fair value gap, breaks lower, spends a nice run into that low, stops dead in its tracks, rotates back up higher. I sell short once more, add one more. Trades right back to consequent encroachment here. Notice the bodies. Okay, go back and listen to every single clip. They're very short. It doesn't take you much time to go through it. But I told you that the lower half of this 5 minute inversion fair value gap, the bodies need to stay below that. That's how you're going to be able to qualify that this is a proper inversion fair value gap that should send price lower. It's okay for these wicks to trade above it. That's where the damage can be done. But the bodies are showing you the signatures that the algorithm is absolutely indicating that this is just running stops. They're getting real, real dirty with it, running each previous high, not allowing anyone that trails their stop loss too tight and aggressively. You got to abandon this idea about quickly moving your stop to break even or locking in something. You're going to have to assume some measure of risk. Otherwise, there's a lot of trades, and it's going to be the better trades you're not going to be a participant in. And the market breaks lower after spending some time in this higher SIBI here in the lower half of that inversion fair value gap. Spends its time here, breaks aggressively lower, comes back up, fails to touch the low of that, and then goes lower. That is another indicator. It's a signature telling you that it's now weak. It can't even get up to the inversion fair value gap. Trades back down to that same low, bounced one more time, failed to take out that high, rolled over aggressively, pierced through it in a small little fair value gap, trades right up into it. Look at the bodies. See that? Isn't that nice? That is algorithmic. It's half of the gap stopping right there, even on this candlestick here. Don't take my word for it. Run your fib between this candlestick's low and this candlestick's high, and you'll be greeted with precision that you've never ever seen before. That's not true. I mean, you keep seeing it all the time on my YouTube channel, but it breaks lower, takes out the swing low, and it creates the very obvious, easy silver bullet. Now, you may not have noticed this one. This is a little bit higher order, silver bullet trade, but this one here is the obvious, easy one that you simply wait for and it just jumps off the chart at you. And that's here, and we're picking up the difference in price. It drops lower. You can see as we're trading into that new week opening gap in blue, I'm taking the remaining positions off as it trades inside there. So you can see, obviously, all this stuff works in Forex. I'm going to do a lot more examples of Forex throughout the year, but I just have to have my focus on NQ for the remainder of this week because I want to take trades. Okay, so I'm not trading Forex with real money. I am trading the index futures with real money. So I'm not making money by showing you paper trades in an asset class I no longer trade. I need to be trading in the markets that actually pay me. Okay, so I hope you can respect that. And I appreciate all the comments that's been posted on the YouTube channel in response to the accuracy and precision and the straightforwardness that I've provided to you this morning on the Telegram channel. If you have not joined the Telegram channel, it's absolutely free. Everything's real time, called before the fact. And the link is inside the video description, and it's also on my community tab on this YouTube channel. Absolutely free. You got to download Telegram, though. It's going to ask you to verify your phone number, so that way you can run it through your app, and your phone number verifies who you are. No one else can see your username. No one else can see that you're a member of it, okay? You're one of the numbers in there right now. It's 37,325 or plus people in there right now. I expected to be a whole lot more by now, but I guess now because it's in a video, and the link will be in the description of the video here again, we'll probably start picking up, more viewers and more members to it. But it's absolutely free. No hook, no future upsell. I promise there's nothing there for you to have to worry about paying for, and no one knows you're there. Okay? I don't even bother looking at the list of who's in there. But that's going to be it for today. And I hope that I will see you tomorrow, Lord willing. And until then, be safe.